Welcome to Telltales. I'm Mike Nicoletti. Every week, along with my co-hosts Jason Wallace and Hunt Lawrence, we bring you the Cash Flow Memo. Get it at telltales.us. For the next 30 minutes, we're going to dive deep into energy, technology, and healthcare. So download the memo now and get started.
The following conversation is intended for informational purposes only. You should always do your own work to determine if an investment is suitable for you.
Exhibit C, no change week to week. The price of oil is about the same. There's no contango, there's no backwardation. By that I mean the 26 price is the same as the current price. Theoretically, there's sanctions on Russia, but they don't seem to be having that much of an impact. There continue to be sanctions on Iran. That doesn't seem to have too much of an impact. Growth and demand is low, especially in China. You oftentimes hear, since India's population is the same as China, you oftentimes hear, well, the growth will be in India. But if you look at Exhibit C, China uses around 16 million barrels a day, which is almost as much as us. We use 20 million barrels a day. India is still 6 million barrels a day. I mean, they have the same amount of people, but it's a much smaller economy. So overall demand growth, which used to be 1 million barrels a day, the forecast by OPEC and others continue to move around. But I think when you look at the actual numbers, the truth is that we'll only get like 500,000 barrels a day of growth in oil demand, mostly because China is flat and the US and Europe and Japan are flat, have been flat forever. So it's just, I guess, that China is more developed now and it'll be flat. So it's the more developing part of the world that provides the growth. And without China going up by 500,000 barrels a day, I think the rest, a good conclusion here, a reasonable conclusion here is oil demand, around 103 million barrels a day, rather than going up 1 million barrels a day, it's going to go up 500,000 barrels a day. So that's puts a little more stress on having supply decline. If you looked at an overall decline curve for the world without new investment, it'd probably be 8 or 10% a year. Well, on 100 million barrels, you'd have to replace 8 or 9 million barrels a day. But people do spend capital. But I think at $60 oil, I think that the growth of supply will level out. As far as natural gas goes, cold weather helps. The 26 price, if you look at the bottom of Exhibit B, is pretty well established at 410. The demand growth is good in LNG, not so good in power, pretty flat in power. I think that's more coal plants being allowed to run. Also, as the price of gas goes up, coal does take some market share. The Trump administration is positive towards all fossil fuels, including coal. But I think demand growth in power will start up again in 26. I think the switch over to having coal plants run longer or higher utilization and to stop abandoning coal plants, I think that's kind of a one-year phenomenon. So I think power demand for gas will pick up. LNG demand, because you can permit these LNG plants now, you have a kind of a friendly environment for permitting them. They'll continue to go up by 2 Bs a day or so, at least. Having been flat, 24 versus 23, this tail end of the Biden administration, I think they'll continue to go up as far as the eye can see. We have to consider as investors that we saw the Trump administration and Republicans lose in Virginia governor's race, New Jersey governor's race, obviously New York City mayor's race. So we have to consider what might happen after the 28th presidential election. But for the moment, I think gas demand's pretty good. U.S. government revenues and expenses, not too much to add. We apparently have a resolution and the government shutdown will end after the House votes. I do think that the deficit is coming down. Some part of that decline is tariff revenues. If you look up the excise and other, which is where the tariffs are, the increase from fiscal year 24 to fiscal year 26, that would be the fiscal year we're in, ending next September, is mostly tariffs, and that's around $250 billion. If the Supreme Court case, if Trump lost on the tariffs, about $100 billion has to be redeemed. And I think that probably can happen, but I still think that the deficit will decline. With that, we have these 10-minute episodes, and the episode this week is the history of Taiwan Semiconductor. If you're following on the 20 pages, Taiwan Semiconductor financial statements are on page 3. It's a remarkably strong company. It does have $23 billion run rate, free cash flow, after spending $30 billion of CapEx. So it's a very strong, well-established company. And with that, over to Mike and Jason.
Okay, Taiwan Semiconductor. Once an obscure contract manufacturer of chips is now, like Hunt said, a multi-trillion-dollar behemoth. But the story isn't just about chips. It's really about one guy, a guy named Morris Chang. He launched his first startup in his 50s. That was Taiwan Semiconductor, transforming a small island into the heartbeat of the global economy. So Morris Chang, born in 1931, lived through 3 wars before gaining admission to college in the United States in the 1950s. He started at Harvard, but transferred to MIT to study engineering. Early in his career, he joined Texas Instruments, and over the next 25 years became one of the world's great process engineers. At Texas Instruments, he didn't just make chips, he made chip manufacturing a reliable, repeatable process. He led projects that took wafer yields from 10% to over 90%, cementing his reputation within the business. The key thing, kind of interesting foreshadowing that occurred, is Texas Instruments did contract manufacturing. And one of his early projects there was to manage one of these contract manufacturing projects. It wasn't really considered glamorous work by any means. It was sort of what they did when they had extra capacity in a fab. But Chang obviously saw the opportunity. The contract manufacturing was a stable business. It was predictable. It spread out risk. It allowed smaller players to utilize equipment that they otherwise couldn't afford. So that little side business at Texas Instruments planted the seed for what would later become Taiwan Semiconductors. By the early 1980s, Morris Chang hit the glass ceiling at Texas Instruments. He was brilliant and well regarded as such, but for various reasons, he was passed over for the CEO role. So he left and started over. So now we're in 1985. Taiwan's government came calling and they wanted to build a tech industry, but they didn't have Intel, Bell Labs, or even a real semiconductor base. But they had 3 things that were maybe slight advantages. First was an educated pool of engineers, cheap but not totally dirt cheap labor, and a government that was willing to invest heavily in infrastructure. So Chang took that opportunity and proposed something that was sort of radical, harkening back to his days at TI. The proposal was for a company that would make chips for anyone without ever competing with its customers, a pure play foundry. So to Westerners in the 80s, that sounded absurd. By 87, the semiconductor world was dominated by vertically integrated giants like IBM, Intel, Motorola, NEC, AMD. Actually, Jerry Sanders, the founder of AMD, was known for saying, "Real men have fabs." So Chang was sort of flying in the face of all this and saw what was coming. He saw that chip design was about to explode, especially in the rise of fabless startups in Silicon Valley. And those designers would need a trusted world-class manufacturing partner. They couldn't depend on these larger integrated fabs to really do good work for them. So Taiwan Semiconductor launched in 1987 with $220 million in funding from the Taiwanese government, Philips as well. Their first fab could make just 5,000 wafers a month. But the idea made a lot of sense. Design anywhere in the world, but build in Taiwan. Through the 1990s, Taiwan Semiconductor became a silent workhorse of the digital economy. While other firms fought over product launches and branding, Taiwan Semiconductor obsessed over one thing: manufacturing process. Taiwan Semiconductor didn't just rise because it was great. It rose because everyone else stumbled. And this makes me think of a story from a guy that I used to sail for named John Taylor, who owns one of the largest beer distribution businesses in Florida. He once told me that in his business, delivering beer, it's very simple. The hard part is doing it consistently without messing up. And he likened it to flipping a coin and catching it. That's easy, but do it 1,000 times without dropping the coin, that's hard. And that's sort of like chip manufacturing. Maybe getting it right in the lab is one thing, but getting it right on a repeatable basis is a totally different story. So during this period, Intel doubled down, making only its own chips. And when mobile took off, Intel missed the opportunity. Its fabs were optimized for desktop CPUs and not smartphone processors. And by the time Intel tried to offer Foundry services, its process technology had already fallen behind. Global Foundries, which was spun out of AMD, couldn't keep up with the capital demands required to stay on the leading edge. It cost over $10 billion in 2018 to build a leading edge fab. And at that point, Global Foundries tapped out, exiting advanced nodes altogether. The third, Samsung, was technically capable, but never convinced the world it could be a true neutral partner. So Taiwan Semiconductor filled that gap by serving its customers without competing against them. And by the late 2000s, it was powering the most ambitious designs on earth. And then we come to Apple. So Apple's A-series chips, which powered the iPhone, were originally made by Samsung. But by 2011, Apple wanted out of that deal. They needed a partner who wouldn't compete with them, who could handle the precision and the secrecy. And Taiwan Semiconductor bet the company to win the deal. It was interestingly, Morris Chang came back in to help negotiate this. It poured billions into a new fab just for Apple, with round-the-clock process tuning and entire clean room zones dedicated to Apple's wafers. When the A8 shipped in 2014, built by Taiwan Semiconductor, it was more than a technical win, it was a geopolitical one. Apple had shifted the gravitational center of chip making to Taiwan. That partnership was the turning point. And once Apple trusted Taiwan Semiconductor, everyone else followed. AMD, Nvidia, Qualcomm, Taiwan Semiconductor became the world's default foundry. And by the early 2020s, it was the only fab making chips on the leading edge. Being the world's foundry also made Taiwan Semiconductor the world's choke point. Its fabs sit less than 100 miles from mainland China. Its extreme ultraviolet lithography machines, which are made by ASML in the Netherlands, are among the most complex devices humans have ever built. The latest generation of ASML high-NA EUV lithography machines cost over $350 million and are capable of etching circuits smaller than a virus. Its technology borders on magic, and it's all concentrated in one place. Morris Chang often said, the U.S. can build fabs, but not TSMC's culture. And we'll see whether their projects in Arizona are able to copy that culture over. So that culture is all about relentless precision, secrecy, and craftsmanship. It's the moat that no one else has quite figured out. Taiwan Semiconductor employs over 80,000 people. It's worth about $1 trillion. And Chang's vision for as a neutral foundry has become the backbone of the modern semiconductor economy. Today, TSMC stands at the edge again because the next leap in semiconductors is really dependent on lithography. And that's where the next revolution is potentially going to happen, whether it's done by ASML or a competitor. There's startups like Substrate, which Jason's going to talk about in a minute, that are reimagining how to bend the laws of physics, if you will, in order to make new forms of silicon. Jason's going to take us from here to where the future goes.
Yeah. Okay, so the roadmap for lithography as we think about it today, ASML says they have at least one more machine planned past this generation. But really, I think it's kind of an unknown even there what happens next. A quick physics lesson is visible light is a form of electromagnetic radiation. Sun produces the radiation, it comes to the earth and as light, it bounces off things around us at specific wavelengths, we see colors. If you add enough energy to something, like by heating it up, it will glow and emit this radiation on its own. So that's what ASML machines really do is they use lasers to put a ton of energy into very small droplets of tin, which emit a very specific wavelength of light. These machines all use UV light, so it's the next step up in energy for electromagnetic radiation from visible light. The next one after UV is X-ray. Really, the ASML machines are kind of bridging as far as you can push UV light down to 30 nanometer wavelengths. It's kind of like the bridge point between UV and X-ray. The more energetic, the smaller wavelengths let you design smaller patterns onto the wafers. EUV has a ton of challenges. You have to produce, like I said, specific wavelengths of light. There's lenses, there's mirrors. All of it has to have clean room, high precision. Can't have dust particles in it, nothing like that. And that's why these machines do cost $350 million each. But the industry was really at a fork in the road, whether you go with UV optical lithography or move into X-ray. The optical lithography was more complicated, but continued traditional processes at the time. So that's what they chose back in, I believe, the late 90s. And we're using that today. So the founder of Substrate took an approach of, if you were going to build a fab and the process around it today, which would you pick? And he says you would pick X-ray, because in the last couple of decades, there's been advances in the engineering of particle accelerators. That's how you have to produce these high energetic X-rays. It used to be like giant machines. They're pretty secretive about the engineering and the physics around what they're doing for the particle accelerator to create their machines. But CERN in Europe produced a paper in 2021 that, I don't know if they were actually building it, but it was how to engineer an accelerator that was about 17 meters long that could produce high energy X-rays. So the founder of Substrate is a Peter Thiel fellow. He decided, his background's more in kind of consumer electronic hardware, but he decided he wanted to bring U.S. manufacturing of semiconductors back, whereas the U.S. is really responsible for a lot of the IP, but as Mike laid out, the IP gets shipped to Asia and specifically Taiwan for the manufacturing. So they think they're past all the technical engineering challenges to produce lithography machines that use X-rays. So higher energy, smaller wavelengths, they can create smaller patterns without a lot of the complexity that an ASML machine has. So, and his hypothesis is that the economics work out now that these ASML machines cost $350 million each, and you need several of them. We can produce X-ray type lithography much cheaper. And his end goal is to stand up a fab by 2028 that can produce wafers at a tenth of the cost of TSMC. So pretty ambitious, but maybe it's a execution challenge now versus engineering. And I would add, like, if you're China and you have an embargo on ASML machines, my suspicion is for the past year or maybe two that this is kind of the route they've been going down. So I don't think Substrate's the only company in the world doing this.
Right. We have hypothesized a while ago that China would pursue a different technology track. We hadn't previously looked into X-ray as that path. There was another form, if you remember the name of it, I don't. Yeah. But it seems that other form is not really possible to do with high volume. So you may be able to do low volume with that other approach. This is, with X-ray, you'd be able to do the same kind of volumes that you do with current manufacturing processes. So it's exciting. It's a very secretive company, this Substrate company, being a startup and having a lot of IP apparently. So it'll be really fun to watch and how that might change the start of the semiconductor ecosystem.
Will ASML try to do X-ray as well?
Presumably. I mean, I'd be surprised if they are not at least thinking about it. They've said that they have a roadmap that gets them to or beyond 2030 with the current state of technology. But if they can do that and keep the cost, right, so if somebody is going to come up with something disruptive to ASML, it's going to have to be better and cheaper. That's what would put ASML in a predicament.
Right. Yes. What about the other requirements, power and water? And Jason, X-ray lithography, they're going to have some of the other constraints that ASML finds with their machines, or Intel or TSMC or whoever's installing their machines.
No, I think they'll still have a lot of the same constraints. A lot of the other processes in fabricating the chips will be the same. The ASML machines use a tremendous amount of power, but I can't imagine these particle accelerators won't use a lot of power themselves. Maybe it's not as much. Right. I'm not sure, but I think they're both very high power processes.
Yes. We talked about the difficulty of financing, say, OpenAI and needing so much inference capacity or compute. How capital intensive will it be to develop an X-ray lithology? I mean, are we talking several $billion probably of venture funding, or what would the budget have to be to get to a point where you could actually manufacture chips?
Yeah, I'd assume it's in the billions. They've so far raised about 100 million in venture funding. So,
well, the CEO said more than 100 million.
Okay.
Nice.
So it's certainly not cheap, but you can see how if they could produce at a tenth the cost of the current process, that would be more than meaningful.
Yeah. Well, and if they build, once they complete their prototypes of these machines and they want to build a fab.
Right. And then you have to wonder, what's the right business model for them? Is it just supplying the lithography machines, or is it creating their own fabs? Because I think they've talked about running their own fabs. So
As long as we're on page 3, the Nvidia page, do you think, and we have to swing to the first pages and then also cover healthcare, do you think that Jensen Huang would be tempted to try to install one of these to run Nvidia's chip designs?
I'd be surprised if they haven't already talked to them and if they haven't been an investor in this thing already.
Yeah.
Yeah, their goal is wafers at a tenth of the cost. So if Nvidia could produce their chips for a tenth of the cost. Now, it won't exactly be a tenth because there's a lot of other packaging processes, but there's a lot of other dependencies on that TSMC has expertise. But if that was a possibility, reduces the Nvidia tax.
During that podcast with Lars Chang, which any of us will recommend to anyone on the phone, and you may even be able to download it from the Taiwan website, was Lars Chang asked about X-rays lithography during that interview, or did they stay away from that, figuring that was not a question he'd be happy to focus on?
As far as I know, no. I haven't heard anybody talk about X-ray lithography, frankly, until news about Substrate started hitting the wires. So this is all fairly new unless you are really, really, really in the weeds on cutting-edge research.
Or fairly old. It was research from the 80s and 90s that got abandoned.
Yeah.
Right. Interesting. Before we do healthcare, page 1, 2, or 3, any news? This is, the chip page 3, the software page 2, and then the 5 of the Magnificent 7 on page 1. Any significant news over the last 7 days?
Amazon, did we talk about Amazon last time? They've announced they're going to double their data center capacity in the next 2 years, which is 10 additional gigawatts. Quite a lot of capacity. Cool. It would be an engineering feat to build that much data center in general.
Right.
Yeah,
they're already running 90 billion in capex. Does this mean they spend more? Maybe that's within the 90 billion. I don't know.
I think it's more. I'd expect more.
Yeah.
The hyperscalers all talked about a short-term power issue with being able to get power to their new data centers, but they also talked about how in the future they expect chips to be a constraint again.
Right.
Uber and Nvidia announced a tie-up where they're gonna co-develop a fleet of 1,000 or 100,000 autonomous vehicles. These will be using Nvidia's Drive platform. I'm not sure the time frame on that, but the interesting part is they're going to use OEM manufacturers, and I think one of them they highlighted was Mercedes. They're going to use production cars, put the Nvidia Drive system in it, and add them to the Uber fleet.
And I think Mercedes is the company that's spent the most time and money working with the Nvidia Drive system, and this goes back to like 2001 or so, or 2021 or so.
So when we think of the Alphabet product and Tesla, we need to include Nvidia. It's kind of a three-way contest now.
Right. Nvidia will be the enabler of everybody else.
Yeah.
Nice.
We did last week take a test ride in the latest version of a Tesla Model 3 with their full self-driving capability, and it's getting very good. It was, I think, the first time it didn't make any mistakes the whole ride, which was about 40 minutes.
Nice.
Yeah.
That's good. Jason, at the end last week, we come to Harrow, so I guess we should start with Harrow this week.
Oh, yeah. So Harrow's been trading down in the last few weeks because of an announcement that they have a lawsuit filed by the state of California against their compounding pharmacy. The allegation is they're out of compliance with good manufacturing practices. It seems like the meat of the complaint is real. They probably were. They're taking corrective action. The FDA also inspects and audits their processes and had a number of findings as well in the past. These were a couple years old now at this point, and they've satisfied it to the FDA's liking. So they addressed it in the most recent earnings call, said there's nothing to announce yet, but they're near to agreement with California. They continue to operate here. So since the initial complaint was filed, the inspection found these discrepancies. California still granted them a license to operate in the state, but this is the compounding part of the business. So now it's a much smaller part of the business than it used to be. And their branded drugs are manufactured by larger commercial manufacturing organizations. So kind of a separate part of the business. Aside from that, the business keeps performing well. VEVI sales are going really well. They've announced earlier this week that the large PBMs are picking up the drug and going to include them on the formularies. And at least one of them is putting VEVI as the first line, the best treatment option for patients with dry eye disease. So a couple reasons that's big is obviously it gets it in the hands of a lot more customers, but the average sale price should climb based on insurance reimbursement versus the $59 kind of direct sale price that they've been operating on for most of this year. Another big thing that Harrow announced recently was they're acquiring the other half of Melt Pharmaceuticals. So it's a company they spun out years ago. They still owned about half the shares. They're buying out the rest of it. The reason this could be impactful is it's a lozenge you put on the tongue to provide anesthetic, I guess, before eye surgeries. Dentists and oral surgeons have adopted it as well. The data looks really good. They had phase 3 data. They're waiting on results from a second phase 3 study before they submit for approval, but their first one, the data looked really great.
And I think what's exciting about that is the deal they struck required very little upfront cash and is fully dependent on milestones, including successful phase 3 approval of the drug and then successive sales milestones that go with it. So by not putting a lot of cash out, they're going to own this entire asset. And remember, one of the things we really liked about Harrow is that they're pretty rational when it comes to capital allocation. They had this product idea, they spun it out, got outside funding, which ended up eating up about half of the equity, and now they're in a position where they can take it in-house. And without risking too much up front, this thing has the potential to be a very large, significant improvement to the size of their business. So pretty exciting.
Yep. And then there's a new medicine development at Vertex that Jason, Mike, and I talked about. I think I've got the situation right during the week.
Which one did you?
Oh, the trial. Oh, yeah. The trial results on the kidney disease.
Oh, povetacicept. Yes, they discussed the results of a phase 2 trial at a large conference this past week. The trial actually wrapped up about a year ago, and I think they probably wanted to analyze the results and talk about them at this specific conference. It was why the delay. The delay was so significant that they've actually fully enrolled their phase 3 study already, but it had dramatic improvement in individuals that have a certain form of kidney disease that is progressive and it eventually leads to kidney failure and and over the course of, I believe, 15 to 20 years. So great data. They feel this franchise could be as big as CF. Treating that specific disease is kind of becoming a competitive market. Their data suggests they are clearly the number one most effective treatment. They inhibit both proteins that kind of have an effect in causing this disease, where all the other treatments look at one or the other. So one of the interesting things about it is the FDA agreed to a rolling submission. It has all the breakthrough designation, all the kind of FDA, the special treatments that a drug can get, but they've agreed to accept the rolling submission. Data is expected to go in from the phase 3 study starting next month. They've already said they're going to use a priority review voucher that they had before. So this was one of the older ones that guaranteed a 6-month review. Since that announcement was made, they've been granted another priority review voucher, I believe last week. And this is one of the newer ones that guarantees you a 1 to 2 month review. So the implication is that this drug that shows extremely good efficacy could be approved in the middle of next year, and it could have a big impact to both patients and the revenue at Vertex.
Right. And just in closing on Vertex, how's the acceptance of the pain medication going, do you think, Jason?
Slower than hoped. I really do think it's kind of a holdup around whether, who's going to reimburse, whether reimbursement's going to come through the No Pain Act, so a government subsidy, or if it's going to be covered from the PBMs and insurance. So I think that's the holdup, is everyone was expecting that to be decided last month, and the government shutdown has delayed it.
Good. Anything else, Jason, we've missed in healthcare this week?
I guess the last thing is the FDA appointed a new head of drug evaluation. He's a longtime employee of the FDA. So he previously led the oncology division, and it's probably a really good pick for stability at the agency, which is needed right now.
Great. I think we more than run over our 5 minutes. So everyone be well and stay healthy, and we'll be here exactly 7 days from now. Take care, everyone. Thanks for listening. Bye-bye.
The views expressed on this podcast are the hosts alone and do not constitute an offer to sell or a recommendation to purchase or a solicitation of an offer to buy any security, nor a recommendation for any investment product or service. While certain information contained herein has been obtained from sources believed to be reliable, neither the hosts nor any of their employers or their affiliates have independently verified this information, and its accuracy and completeness cannot be guaranteed. Accordingly, no representation or warranty, expressed or implied, is made as to, and no reliance should be placed on, the fairness, accuracy, timeliness, or completeness of this information. The hosts and all employers and their affiliated persons assume no liability for this information and no obligation to update the information or analysis contained herein in the future, and may or may not hold positions in the securities mentioned.